Hello and welcome to Big Deal. I'm Nisha Podar. Now, right at the beginning of a new financial year, it's time to also take stock of the key game changers on the deal street in the year gone by and what's really spills over to this particular fiscal and the M&A investment, IPO, fundraise pipeline building up for this financial year. So my single biggest takeaway from the last fiscal is the large block deals which gave easy exits to the investors, which is a big confidence booster for the private equity investors. And also it changes the dynamics on the deal street going forward. Now to discuss other key takeaways as well as the outlook for FY25, I've lined up a couple of experts, deal makers joining me on the show are Vivek Gupta of Deloitte and Debasish Purohit of Bank of America. Thank you so much, gentlemen, for joining us right here on the show on CNBC TV18. Now, Debasish, key theme that I mentioned, a lot of private equity players have been talking about that. Apart from that, and this included, what are the key themes and learnings from the last year which are going to have enough impact on the deal street for this year and in the near term?
Sure. Thanks. First of all, thanks, Nisha, for having me over here. I think when we look at the key thematics kind of running over from last year and hopefully continuing to the next decade or more, I think I can probably bracket it into 4 or 5 mega trends, which is kind of sweeping through India Inc.
Yes.
And to start with, I think the first one is we're in the middle of a massive infra capex. I think you've seen the last 10 years investment, particularly in transportation as a space, has outpaced the cumulative previous 65 years investment, right?
Yes.
And the next leg of infra capex spend is going to be driven by energy transition.
Yes.
So I think India is going to build more roads, more infrastructure, more airports, and we're firmly on the path of decarbonization.
Yes.
And which means that I think asset platforms will be created, assets will churn, and more investments will come through.
Right.
The second megatrend that we see is the formalization of the economy, which is moving away from unorganized into organized.
Yes.
And that is great for consumers because it leads to better price discovery, great for manufacturers because it leads to efficiency. There's a second trend. The third trend is the overall digitization and financial inclusion. On one hand, I think consumers are getting easier access to financial services coming to the mainstream, and for the manufacturers, it's better credit decisioning based on data inputs.
Right.
I think the fourth point is the overall premiumization of the market, which is I think there is more disposable income at people's hand, which is on one end is driving the consumption boom, and the second is the largest savings also helping develop the Indian financial markets.
Right.
And the fifth and the most important trend is the pivotal shift India is undergoing from a largely services-led economy into a manufacturing-based. So I think these are multi-decadal trends which are here to stay and will drive the bulk of deal activities.
All right. And a large part of that, traction is already building up from the last few years, and especially in this particular year. We have 2 big events also in this particular year, which is going to also be a key, I think, proponents for a lot of decisions. I'm talking about elections as well as the interest rate cycle turning. Now, Vivek is joining us all the way from London. Vivek, thanks so much for making that special effort in a different time zone. Debasish spoke about a whole host of trends that are really picking up. Private equity has played such a huge role in deal making as well as fueling the growth of many companies, and they are now talking about manufacturing and infrastructure, the 2 capital intensive sectors, for the first time. So that's a big shift that I'm seeing. What about you in terms of key trends? What are the main events for you and the key aspects on which you're going to be going full force on deal making for this year?
2 points. I think Debasish picked up the trends very well. But 2 additional points I'd like to make. One, I think India, from primarily an economy that would service the outside world, is becoming also a very strong domestic consumption play. A lot of multinationals read that domestic consumption play incorrectly in the late 90s. That now in the early 2020s is a reality. So this whole aspect of domestic consumption, I think, also drives pivotal shifts in the way corporates and then private equities tend to invest. So that is one. The second thing is actually geopolitical. If we have the same government come back into power, I think we will see at least a 24 to 36-month period of intense decision making, a very decisive government coming back, if it does, for the third term. And that always has a knock-on effect in terms of deal making, because if there is a certain economic environment, that is bound to lead to more deal making in the economy. Now, this is also what I believe is driving a lot of flows into our Indian capital markets. And by geopolitical trend, I also mean that India stands out in the world today as a country where it's safe to put in capital. And if you see capital market allocations for large global investors, India now appears as a very strong component of that global allocation. So to me, these two trends, in addition to what Debashish very correctly noted.
Right. Investor outlook towards India, and Debashish and Vivek, both of you would agree that they are now exuberant about allocating more towards India. For the next 5 to 10 years, there is a lot of confidence being exuded by these investors. Now, Vivek mentioned about the capital markets. And of course, that has a huge role to play in terms of liquidity, entries, exits. Debashish, what do you think about this particular year and the key events for the IPO market and other fundraising plans from the capital markets?
Yeah, exactly. I think the health of the IPO market, I think it's a derivative of the strength of the secondary markets.
Right.
And today we are sitting in what, the third or the fourth largest market cap anywhere in the world. And we've steadily jumped up from whatever 7th or 8th, whatever 5 to 6 years back.
Yes.
Almost a $5 trillion market cap. The second thing is the liquidity profile of Indian markets has undergone a massive transformation. I think a couple of weeks back, we priced a $2.1 billion block in ITC, the book called Built in 4 Hours Flat, at 1% discount. Like, these are things which you wouldn't have heard of like 10 years back. I mean, that's the strength of the market. The third thing is, I think the color of money is shifting. It's getting more domestic rather than predominantly foreign. It's a nice mix between the two. Just to throw some data points, if you look at the last 10 years cumulative net inflow into India, almost like $100 billion contributed by domestic institutions and about $80 million contributed by foreign. And out of this 100 for domestic, 70% has come in the last 2 years. I mean, that's the strength of the domestic market. The passive flow is massive. And all this will augur well for the IPO market, because if you look at last year, I think total IPO volumes about $7.4, $7.5 billion. I mean, far cry from the 18 billion we saw in 2021, with only 2 large IPOs of $500 million plus. I think that is going to undergo a massive transformation. So I think my bet is 24, 25 combined will be the best ever IPO market that we have seen in our lifetime.
24 and 25 combined. All right. So, wow, that's a big statement coming in, Debashish. And next year, we are gearing up for a lot of large IPOs as well. And Vivek, what do you have to say about the IPO market in particular, and especially the unicorns getting ready for that? Is the market going to give them another chance?
This is a cycle in some sense, right? 10 years ago, I appeared on a similar show saying externalization is the way. US markets are really deep. 5 years ago, just when COVID started, 4.5 years ago, there was a lot of talk about direct listing of companies housed in India overseas, just because investors felt that the depth in public markets outside was far more. The point that Debashish drove just now, our domestic market depth now, in terms of both foreign investors and domestic investors in the Indian market, and the ability to find replacement investors for even large block deals. And the overall strength of the secondary market is what gives unicorns the confidence that they must approach the Indian markets rather than the global markets. Indian markets, even from a multiple standpoint, reflect that kind of exuberance. So what we are seeing definitely is that unicorns are wanting to make a play of coming back into India. We've had the government very clearly say that, look, if externalization happened earlier, if unicorns were to internalize now because they want to access Indian capital markets, they must pay whatever tax or toll tax that needs to be paid on for accessing the Indian markets. I think there are interesting possibilities there. So Indian public markets in the context of unicorns certainly look attractive at this point in time. From purely from a listing perspective, while one is seeing a lot of action of Singapore, US, headquartered Indian unicorns wanting to come back, I do think that the IFSC here, which is Prime Minister Modi's pet project, can operate as a very viable via media to access the Indian capital markets potentially through an ADR and take that potentially through an IDR and take that benefit and also give the IFSC markets a fillip. So for the unicorns, I don't think it's just it's a mad rush to internalize or need be a mad rush to internalization just yet. They could access the Indian capital markets in very many different ways, and I think the government will also be happy to facilitate that kind of move from an IFSC public markets perspective. But certainly, I agree with the basic point Debashish made. Secondary markets very strong. Indian markets therefore at multiples that reflect the kind of demand that exists in the Indian public markets, and therefore for pure economic animals, including unicorns, it makes sense to list back in India.
Vivek, you made such an interesting point, and especially about that burning topic of ghar wapsi of the startups. Just a few years back, we were talking about the externalization as well as also global direct listing, which finally didn't actually fructify, and now all of them want to come in. But with one player paying a huge amount of tax already, matters have become difficult for the others. So we have to see how this particular space really develops and will be on top of the agenda and will create a lot of action on the deal street. But Debashish, you've worked on so many of these transactions when it comes to the IPO. We've seen how in the last 5 years, the way the cycles have shifted and the learnings. In terms of valuations, what do you think is the tide turning towards? Are the companies really accepting the kind of valuation the Indian market has the appetite for?
Yeah, I think again, this is, we go through these cycles, right? I think 21 where there's a FOMO,
yes.
you throw anything and everything is captured.
Yes.
22, 23 were struggles, to be honest. It was a biased market. I think in certain pockets, domestic investors held sway on valuation discussions with issuers. Last year, there was a comeback from foreign portfolio investors to make it a balanced play field. I think going into this year and next year, I think it's going to be probably somewhere in between. I think the good news is that we are not seeing the mad level of exuberance that one saw in late 2021 in terms of IPO pricings. I think discussions are very constructive. I think investors want to play some of these stories, both across foreign portfolio investors as well as domestic. I think issuers also pretty sensible in terms of, and I think everyone has understood the playbook that going into public is one part of the story.
Yes.
I think staying true to your fundamental equity story for the subsequent 2 to 4 quarters is even more important. And the good news is that if you look at the average returns from IPO of IPOs which priced last year, it's in the range of 30%,
yes,
which was 10% the year before. So these are, I think, some of the successful recipes of making a vibrant IPO market and sustaining it over a period of time.
That's right. Debashish, one big change that has come about is that the new age startup world tried to teach the public market about the matrices on which they should be really valued. But in the end, it's what's the bottom line is the actual line that really prevails in the IPO market, and the other side has understood that, hopefully. And path to profitability is at least articulated by most of the companies. So that's a big change and a shift in mindset that has really taken place, and that is going to really get cemented further in the future IPOs that we are going to see. All right, Debashish as well as Vivek, hold on to your thoughts. We have lots more interesting deal trends to really discuss on Big Deal right after this short break.